Hi, this is Asad Mahmood. I am the CEO of SIMA Funds, and for the past 25 years, I've been working in impact investing and seen a lot of smart pioneers in this space. And a lot of people are not familiar with the history of where impact investing started. So I've decided to do a series of interviews with the leaders in impact investing that had a tremendous impact in creating this industry. And today we have Jean-Philippe de Schrevel, who's the CEO of Bamboo Finance, but was the first private sector impact fund, was at that time microfinance, and JP started and grew Blue Orchard with Cedric Lombardier, and he's really one of the leaders, and he's created two successful companies. So we have the pleasure to talking to JP. Welcome, JP. You know, we are doing this impact investing series with the objective of really introducing some of the pioneers in the field of impact investing, whose back really this industry was created around. Especially, we are focused on the private sector fund managers that were the pioneers in developing this. And there are several of us that had worked on this. Today, I start with the person who really was the first. He graduated from Wharton, one of the best business schools, and instead of pursuing money, which he could easily have, JP, who, as I know him, Jean-Philippe de Schrevel, if I said it right, JP?
That's fine, that's perfect.
Started something called Blue Orchard. And Blue Orchard really was the first private sector fund management in microfinance, which was the mothership of impact investing. So we're going to talk to JP about that. And then he went on beyond Blue Orchard, and he established a first fund in that looked beyond microfinance into other areas called Bamboo Finance, which he's currently the CEO. So welcome, JP. It's a pleasure to have you today with us.
Thank you for having me, Asad, and thank you for this initiative, which I really appreciate. Thank you.
Good. So why don't we start about your childhood and your early ages? What that's not a normal thing for somebody to graduate from Wharton and then want to work with the poor people. So what was that influence in your childhood when you were growing up, or what led you to this impact investing? Maybe you can tell a little bit about your journey.
Sure. I suppose it's a combination of many different factors, as always. What you have as talents at birth, and then what you inherit, and the education you receive. I guess I grew up in a Christian family that always impressed on me the importance of caring for others. That was a very big impact, I believe. And thinking about it retrospectively, a big impact on my decision and my career path. Also, maybe to mention that I spent my first 6 years of my life in Kinshasa. Maybe that influenced in some ways that I could not describe, but possibly. More consciously, I think a big impact on me was my trip to India that I did when I was 20 years old. I was then in third year of university in economics, and that trip made me decide to do development economics as opposed to my enterprise or corporate business. And I spent almost 3 months. First trip outside Europe, 3 months in the slums of Calcutta, visiting the projects and the places where people would die, and organized and cared for by Mother Teresa. So that was, I think, a big impact. Then a few years later, I think another big impact that reinforced my desire to do something was my trip to Bolivia. First country I discovered in Latin America, also when I was in my 20s, and there I remember being in a remote place in Provincia Sudanes, in the middle of nowhere, and I saw a little girl that probably was, I don't know, 5, 6 years old, die because there was no doctor around.
Yeah.
And I guess this combination of my education plus those experiences that were tough experiences for someone were age 20, 21, 22, probably contributed to me choosing a career that hopefully would be helpful to others while building on my talents. That's and my education. That's what I could tell you. And then of course I went on and I became the CEO of a microfinance foundation in Argentina after my MBA, and then it just added and built up. But always with this intention of doing something. Now, exactly what, frankly, Assad, I did not know at the time.
Yeah.
Life is about opportunities that you take or you don't take, and that's it. I hope I'm answering your questions, but those are the pieces of
No, this is very interesting for me as well. I presume, what was the institution in Argentina that you were the CEO of?
Emprender.
Emprender. Okay, sure.
Fundación Emprender.
Sure. Yeah, sure. So I think maybe the next question that naturally relates to your influence of, sort of being in the slums of India for 3 months and really having a heart and a soul to do such work. What was the genesis after your being the CEO and seeing the NGO mentality in a developing country? What was the genesis of then Blue Orchard, and what is that name, Blue Orchard? Where did that come from?
Well, the name was, if I may be honest, a crazy brainstorming session with my friend Cédric Lombard one day, where we were looking for a name for the company we would be launching, and we wanted something that would stand out, be a bit special. Started with Yellow Submarine and ended up with Blue Orchard. But if you want to rationalize it, blue because it's a color of hope and bright skies, and
yes,
orchard because it's the fruits of the earth and something you can share, and it's production. So we liked Blue Orchard, and we stayed. We kept it, and apparently more people liked it, so that's cool. And then on the genesis of Blue Orchard, that's been a long, again, succession of meetings and exchanges. But I think the person that really was the inspiration for me to do this is someone I had the chance of working for when I was at UNCTAD, Franck Grosel. Franck is the person that, for me, represents the best of a civil servant, forward-looking, inspirational, courageous. And I remember one day he shared with me a 2-page paper on the setting up of a for-profit asset management company for, microfinance and impact. And I remember thinking when he gave me this paper, I mean, this guy is nuts. I mean, there's no way we can do that. And then over time, spending time with him, learning more about microfinance, exchanging ideas with friends, Vincent Burgui, Cédric Lombard, and others, actually the idea started crystallizing. Mm-hmm. And then, of course, as you know, when you need to make the step, you need people supporting you. So Franck was the inspiration, but of course, I had a few people in Geneva that surrounded Franck and actually believed in the project. So Melchior de Muralt, Ernst Brugger, Cédric Lombard's father, and their friends, they all came around and they all supported the initiative. Without them, this would not have been possible. So aside, it's a combination of course, hard work and willingness to do something, inspiration that you take, an opportunity that you grab, and then you gather strength with other people, and then you jump. You just do it, and then you hope for the best without knowing too much. I remember another person that supported us was my professor of finance at Wharton, Bülent Gültekin. Bülent was and still is an amazing leader. He was the governor of the Central Bank of Turkey. He did many engagements with, the IFC and the World Bank, etc. And he's kind enough to invite me from time to time to teach back at Wharton one class about, impact investing. And he always starts the class with my business plan that I showed to him, in 2000. And I don't know how people would believe what I wrote in there, but then, you know, that's always a lot of fun to see that again and see the faces of the students looking at this business plan, and then of course 20 years later seeing what has happened. It was really a shot in the dark, but I mean it was a great shot. So cool. That's the, you know, I could go on and you know, with many anecdotes, but essentially, as said, it's an inspiration. It's a few key people supporting the idea, and myself and Cedric, of course, this partner, this wonderful partner that came with me and embraced the idea, and then we started.
Yeah. Now, clearly, I mean, I think the support that you had from people like Frank Rosell and Cedric Lombard's father from the Lombard Day family was important, but it wouldn't have happened if you didn't have a clearly defined vision and idea that they felt that somebody who's capable of executing. So I think from that, a natural question is especially for the younger audience who are looking to, you know, because we haven't discovered everything in the world yet. So there's a whole future, and there's a bright future for the field of impact investing, which was in your days and my days is known as microfinance. So tell me, or tell the audience really, with the perspective of people wanting to be engaged in this sector as pioneers themselves, what were the initial challenges? You know, what were the key issues that you struggled with, and how did you overcome them? I know it's a big question, but maybe you take a shot at it, at the most salient elements of it, JP.
Sure. But maybe before I go there, another element that you mentioned, and the belief of people in the capacity of execution, I should mention, of course, that before launching Blue Orchard, I was recruited by Dexia Asset Management back then as the manager of the Dexia Microcredit Fund, right? And during a year, I could show what I was capable of doing by actually lending money and the seed money that was in this fund, getting the money back, generating returns. So of course, it didn't start with nothing. There was a fund, there was seed money. I remember the chairman of Banque Internationale à Luxembourg, André Roulans, also, you know, accepting that I would become the fund manager of the Dexia Microcredit Fund and trusting me and giving me basically you know, a license to go and lend money to those microcredit organizations that nobody really knew what they were. So that's important to mention. And then Blue Orchard came a year after myself being the manager of the Dexia Microcredit Fund.
Yeah.
And talking about people, because I think it's important, the CEO at the time of Dexia Asset Management, Bernard Herman, I owe him a lot as well, because I was a manager. I was managing $10 million back then, small seed money from BIL. And I went to see him and I say, I have an idea. I'd like to start Blue Orchard. Will you just enable me to do it by giving me the fund in advisory, right? So I would become the fund manager of the Dexia Microcredit Fund, but from the outside, from outside the bank.
Yeah.
And that allowed me, he said yes, against all odds, you know.
Yeah,
and
sure.
He took a big reputational risk, but he is the person who allowed me to start a company with revenues from day one, which is very important.
Yeah.
Now, the challenges, Assad, I mean, as you can imagine back then, ESG, not impact. ESG was barely beginning.
Yeah,
right?
sure. So this is just to give context. Which year are you talking about? 1990?
2000. No, 2000.
Yeah, 8, 9, that's period of time.
Exactly, 2001, 2002, you know, ESG was beginning. I remember Dexia was trying to push that, but very cautiously. And so don't talk about impact investing. So the difficulty was really to convince private investors that we were not tree huggers, that Cedric and I were actually about to lend money for real, to get the money back, generate returns, just like any other investment proposition, except that we would do good on top of doing well. And so that was a constant battle, Assad, and you know, it was really one meeting after the other, again and again and again. And then in parallel, we had, of course, to manage the portfolio, to travel really extensively, because back then we were just two of us in an office in Geneva. So imagine, you know, we were landing in Honduras, in Guatemala, in Tanzania, and of course we had to travel. I remember doing you know, Central American trips in 1 week, a day per country, just to push that money out of the door, and as best as we could, because we knew that we didn't have the right to make mistakes at the beginning, right?
Yeah,
Because otherwise
sure.
people would have said, I told you that's not possible, right?
And there were a lot
And
of
then
people like that, sitting
a
on
lot of people,
couches in fancy hotels talking about poverty, but not really doing anything. Um,
exactly. And then I must say, back then there were microcredit, microfinance networks. Remember Women's World Banking, Action
yeah, sure.
International, and
Nancy Barry, yeah.
Nancy Barry, and they really welcomed us. They accepted us. They introduced us. Um, and I must say that was a big help as well, right? So we have to recognize that those NGOs and networks were out there already doing the work, for decades, except that they were doing it from a grant perspective as opposed to from a commercial investment perspective.
Yes.
And they were open-minded and they embraced it. So
Yeah.
I must say that it was a big help. So a lot of travel, a lot of doors slammed in our face saying, you guys are dreamers. And then just sticking to it, and we grew, Assad. I mean, in 7 years we grew from $10 million to $700 million.
Wow.
That
Yeah.
was back then it was a lot.
Yeah.
And it was at the beginning, family offices, high net worth individuals from the private banks, but then the big step in terms of size, and I was going to say in terms of quality of investments, was really the institutional step, right? When you have pension funds in Europe starting to invest in your product, then it means that you must be doing something okay, right?
Yeah.
So I hope I answered your question, but that's a lot of work, a lot of convincing, and certainly not to be discouraged by the 99% failure rate of discussions to have investors investing in your fund.
That's really important, is to sort of, if you really preserve your ideas and don't compromise and continue to push on it, and if these are good ideas, they will in time be accepted by people. And that is your story, really. So out of all the challenges and the successes you have had, what would you say, JP, you're most proud of when you look back? And you've reminded me of so many names that I had forgotten, like Dexia and Frank Rosell. And, so tell us about what, when you reflect back and look at the early days of the creation, what do you think was the proudest moment for you and why?
So in terms of, first of all, I think success here is defined by the realization of the mission. So it's really how many people have we helped live a better life. And I don't know, honestly, how many people we have helped through the companies that we were supporting, but it's certainly millions. And that's my best achievement. I would say it's like really feeling that during 20 years, the money that we have put to work in companies has truly changed people's lives for the best. So that's really very gratifying. Now, if I have to, on the more technical side, the product development side, if I have to mention something that I think I'm quite proud of, is the first collateral loan obligation we did, back then. That was in 2005-6. Back then it was Morgan Stanley, and then the IFC and OPIC at the time, and I'm especially happy and proud to have convinced S&P to actually look at microfinance and for the very first time rate microfinance institutions. That was not a piece of cake, right? I remember Gary Koshupka, managing director at S&P. He was such a champion for us. He was fantastic, a brilliant mind, open-minded, but of course, with the S&P hat on. And it took us 2 years to convince them to do that. And it was a lot of work, a lot of data, number crunching, etc. But we did it, and I think it proved the case. It broke one one bottleneck, right?
Yeah, sure.
And being able to have a rating from S&P on the CLO in microfinance in 2005-6, I mean, yes, we're proud of that. And then there were many other successes. For example, right now, the story is not finished, and I'm very, very proud of the partnerships we're forging now with UN agencies. It's a different chapter that opens up, but as you can imagine, between a private sector fund manager for profit and a UN agency, being able to combine the two into something that is coherent and works, and has a lot of potential. I'm very, very happy about that as well. So just to mention two things.
Great. I mean, I remember the first transaction, I think it was for around 60 or 80 million. I remember this was OPEC had
Exactly.
invested in it with the, and then there was a Chase bought the top piece of it,
Yes,
which
that was the rated piece. Yeah.
The rated piece, which was guaranteed by OPEC based on individual investors' first loss piece.
Exactly.
I think that was the first structure that you had done. Great. I think it was an achievement in terms of sort of bringing in institutional investors from philanthropy to an investment framework. These were the essential component, and I think, as you recall, the rating issues were that they were capped to the in-country rating, and those challenges were very there.
I remember, and also the great work we should mention, Assad. You remember Damian von Stauffenberg, right? With microrate.
Yes.
An amazing big help as well, right? In terms of the way we would construct those portfolio, rate those portfolio, convince investors. They did a great job as well, right? It was really teamwork here.
Yeah. No, I intend to reach out to some of the people you're mentioning in this series with the the real pioneers of impact investing that really on their initial work, and not that we don't I'm saying we all stand on somebody else's shoulders. So and that is part of the story here. So I think I maybe at this stage maybe we sort of shift towards the industry and think about what do you think where are the greatest challenges, an opportunity in impact investing? How do you see this industry moving forward? Maybe you can give your views on the challenges that we still face, and to create awareness around those challenges for people. And how do you see the opportunities, JP?
I mean, many challenges and many opportunities. Well, first of all, the one thing that I'm absolutely convinced about is that there's no backtracking, no way back, right? So ESG is mainstream. It was beginning 20 years ago. Impact investing is going to become mainstream. And it's at the forefront of ESG, if you want, right? I mean, that's really, as you know, the truly in the trenches impact generation, on this wave of ESG. I see funds popping up every day here and there. So the good news is no backtracking. Difficulties for me, and I've always struggled with that, is how do you get to scale while doing $2 million investments on average? So if you want to remain true to, I'm speaking from the Bamboo perspective, right? Bamboo Capital. Our sweet spot is really the early stage SMEs in emerging and frontier markets. That's where we are and where we operate and where we believe we make a big change. And the ticket sizes that you have there between $500,000 to $5 million. You don't manage multi-billion-dollar funds doing that, right? It's very tough. So the question is, how do you reconcile being true to your mission and getting to scale so that eventually you attract institutional investors? That's the big question. And I think that's one of the key challenges our industry is facing. Another one, of course, as you're well aware, is the danger of greenwashing and social washing, right? And the big guys coming with a label saying that they are impact investors, and actually, I was just reading an interview of the former, head of sustainable funds at BlackRock saying that, you know, maybe at least at most 1% of their funds is actually sustainable, even though they call themselves sustainable across the range. So I think that's dangerous, because it could induce investors to say, okay, well, then I'm sticking to that, and I'm a sustainable investor, I do good, when actually their money is not being used effectively to make a change. I think that's dangerous. There's coming regulation to make some order in that, and that's very welcome. But that remains a danger. So that's it. Besides that, I see, as I was mentioning, a promising convergence between the traditional NGO model and UN agency model and impact investing, and we still are, I think, at the beginning of that. But if we can find a way to combine the strength of the two types of actors, you know, those big NGOs with thousands of employees on the ground, UN agencies with tens of thousands of employees on the ground, and you can channel and harness this footprint, and connect it with investment capabilities, then maybe we have solved the question of scale in some ways. Another option would be to scale by aggregation, and that's what we're trying to do now. Assad is really basically, you know, you pool different funds together of the same nature, even though they're active in different sectors and geographies, and then you sort of redo the CLO we did in 2004, 2005.
And multiple managers, right?
Exactly, multiple manager, and you do an asset-backed security on multiple managers, and or at the very least multiple funds, so that you can attract institutional investors' money. Maybe that's another option. So, but I'm very positive on the future of impact investing overall.
I think you've brought about very important points. I think you know, issues of scale in an industry where the product, you know, is not available as readily to get to scale. So that leads to sort of some loose definition of impact investing, and then everything becomes impact investing, and you read the annual reports of all these investors. I don't want to single out BlackRock in itself, but you've seen the controversy that came about in Deutsche Bank in recent days, where they, you know, questioned that what sustainability was, their chief sustainability officer. And I think it was also in BlackRock, there was a guy, Pakistani guy, Fancy, Tariq Fancy, who raised those issues. So, you know, these are real challenges. And then some of your thoughts around, and when you talked about the partnership, and I think one should not take that lightly, but think about, you know, we worked on an education finance company in Pakistan and other places. There's so many ineffective infrastructure. The biggest expense in creating a school is the infrastructure. And there's so many government schools that are totally non-performing because the management isn't there. And so this partnership idea is not just in, you know, I'm saying there is reality to it. And then you talked about the regulation. You know, I worked, as you know, in Deutsche Bank. I was working also on the community development side, which was really was successful because there was something called a Community Reinvestment Act that forced banks to invest money where they were taking developments. And I know that in France, there was, you know, requirements for companies to show their sustainability reports. And I think Europe clearly, JP is the leader here. You know, Americans are a little bit behind here. But that elements of what the work you're currently doing, I wish you best with that. And that really you've sort of distilled the key issues here. The role of, you know, the government sector, or maybe even to say development banks, because if you look at the impact space, while there's a lot of talk, as you know, JP, the actual investors are fairly limited, and development bank who have played a tremendous role in sort of furthering this sector. And we don't want to sort of minimize that, but how do you see the evolution of how development banks can really look at the scale and, you know, one-off transactions, the legal process of doing things, which takes years to complete a fund. Any thoughts on that? I'm sure you've given it some thought in terms of where positively we can move this industry.
As you mentioned, Hassan, I think they're absolutely necessary, right? And they do a great job. DFIs, are very important in the field of impact investing. The only thing is that sometimes I wish they were a bit more risk takers, innovators. It's probably about also their mandate, their staffing. If they have a mandate not to lose money and to channel big amounts of money with a very limited staff, there's so much they can do, right? Now, if the governments that own them and direct them would be a bit enlightened to staff them up and give them mandates to take more risks, go smaller, support, innovation on top of everything they're doing right now, which is okay. I think that would be very, very helpful. And it is sort of difficult today to see that in our blended finance vehicles, we have to rely on private donor money and philanthropists and venture philanthropists to protect the development finance institutions that would come in a mezzanine level or on a leverage level to have the hope one day to have institutional private investors on the senior tranches. So seems to me that DFIs should be taking the first loss risk in those blended finance vehicles. But I'm understanding that it is not today in their mandate, so they cannot do it. I would suggest that. Of course, I'm nobody to suggest that, but if only one or two of the DFIs we know were to do that could provoke some change.
Yeah, I think they have windows. They have the Massif fund from
yes.
And then they have I think they have these windows. The idea of how do you sort of create these partnership ideas and create efficiency. I think pace of deployment, efficiency in the legal structure, I mean, those are real challenges and, frustrations really on part of both the enterprises and especially the legal side of things are so complicated. I think those are very good thoughts, and hopefully we will influence some of these people. There is as this catalytic investors consortium that some of the foundations are working on. And I think collaboration is easy to say, that we should collaborate. And I've, worked on so many, efforts towards getting foundations to work together for the common goal. And it somehow gets lost on those challenges. And I'm not quite sure, what the solution is, JP, towards that. But I think it's the need of as we are facing a lot of challenges with the climate in the world and the impact of climate. And I think you have, sort of been thinking about that in the sense of, the real migration, people are leaving and putting their kids in rubber boats. You are a father, I'm a father, people who have children can understand that act of desperation. So I think that the time is here to create the development banks also as a meritocracy rather than a bureaucracy, and to have non-political implications, to those things. But I think it's a challenge that we will struggle with. So maybe, moving towards the private sector and the challenges, because I don't think it's one challenge, right? You have sort of a landmine of challenges. So this, sort of the blue washing and things of that nature. And let's not sort of generalize and punish everybody in this discussion. The purpose here is to move forward the industry and to recognize the work of, AXA and MetLife and Prudential and, CNP and all these, BLI you mentioned. I mean, the CEO supported it. So there are the private sector people have played a role, but in an environment where you're not getting the first loss, and the history is not that significant losses in the industry. How do you get the private sector to appreciate those challenges. They can lose all the money in the stock market and they don't mind, but when it comes to this, all of a sudden all barriers are established.
And that's what drives me crazy, right? When I talk sometimes to pension fund managers, they invariably come back with their fiduciary responsibility. And I'm tempted to say, okay, well, look at the world, look at the state of the world. Do you really believe that you're going to have pensioners in 50 years? And in what world are they going to live? So don't you think that your fiduciary responsibility is to make sure that they have a world to live in when they retire? And so maybe with your investments, I mean, do take risks. And I agree that, of course, a 600 billion euro pension fund in Europe is not going to put all their assets into things we're doing, Assad. Of course, just put 1%, right?
Put half 1%. a percent. That's still a significant
0.5%. And what is it going to do to your bottom line? Nothing. What is it going to do? Is it going to put at risk your pensions? Absolutely not. And you could actually be surprised by the returns we're generating for you. I at this stage, after 20 years, I said, I don't know what else to say. I honestly, I don't get it that they don't get it. I don't know. One issue, of course, is again size, right? I understand. I was talking to the CIO of a large sovereign wealth fund somewhere in the Middle East, and she was telling me, Jean-Philippe, I mean, we're a team of 12 people. We manage, I forgot, $150 billion, and I'm not going to consider any transaction less than $1 billion. And then again, I cannot be 100% of your fund. And, I was feeling there was such a disconnect. She was intrigued. Of course, she's brilliant. She was, forward looking, but she said, I'm not equipped to deal with you, so to speak.
Yeah, that's exactly. They don't have the pigeonhole where to put this, right?
And they should. I believe they should, because it wouldn't cost them much. It would bring them tons of learning and eventually probably exciting opportunities. So I hope a few of them can create this pigeonhole, because that would be the inroad into those masses of capital that we need to solve the problems.
Yeah. No, I think that's very true. I mean, when right around the time, we had done a fund in 2005 and Storebrand, the Norwegian. So there, it was about people. There was a person there by the name of Frederick Ottesen, who was the chief financial officer, just like you, the CEO of BLI. So I think at this stage, it was because of him. Within the 15 minutes of my meeting with him, he said, "Oh no, Assad, we're going to invest in this." And it was, it was his energy really, because I couldn't do it from the outside, but he was able to do it. And I think that now that we are at a stage where all these people are talking about every single investor, you talk about, we are integrating ESG. What does that mean? What is there? Are you training? None of that is clear from, not obvious to us. So how do we take this sort of social pressure that they're getting, especially from the millennium generation? How do we take the power of the individuals, and how do we convince these people, because organizations are just people. And maybe that is something to, not lose hope on. I appreciate the frustration.
No, and I agree with you. What you need are champions, taking career risk, taking, chances on ideas and projects they believe in, and they're not crazy. They're not putting at risk their organization. They're just, trying new things. I remember, one of my first institutional investors at Blue Orchard was APG. I mean, one of the largest European pension fund. And I remember Jan van Rockel, who is now retired, is the champion that, opened the door and says, Jean-Philippe, okay, here's your first 20 or $30 million. And then we had many people, and it's true. And when we talk about non-institutional investors, but family offices and private investors, what I find is that when you have the chance to speak to the owner of the money, the principal,
Yeah.
That's a very different conversation than talking to the gatekeeper, right?
Yeah.
And usually the gatekeeper is not incentivized to take risk, but to keep his job.
Yeah.
But if you talk to the owner, then it's a different story, because if they believe in you, in your objective, and in your capability of execution, you're going to get the money. You remember, I had my angel Italian ultra high net worth individual that I cannot cite today, but she was just absolutely fantastic and a great supporter. And
Yeah.
I remember the first time I met with her, I spent an afternoon at her house here near Geneva, and the next day I had $10 million in the Dexia microcredit fund, and
Yeah.
that was just a show of faith. It was a personal connection between
Yeah.
human beings willing to do something. And of course, after that, everything that comes around, in terms of the processes, the regulations, and the audits, fine.
Yeah. Yeah.
But there's a first personal connection that needs to happen, because in the end, it's a people's business, Assad. Um,
Yeah.
so
Sure.
so I wish there were, and I'm sure there are, associations and circles of such potential investors that could listen to stories and make quick decisions. We need more of that.
Yeah, certainly. I think, the idea came across my mind, JP, as we were speaking, to get all these people that retired and are still there together, in
It
a
would,
room to sort of say, how can we approach these other asset managers to, there may be some industry-wide ideas that are not limited to one fund manager.
of course,
Um,
of course.
but they are, the collaboration idea, I think there's a lot of value to it, because it can achieve greater results. But JP, maybe we look inwardly, right? We looked at different players in the sector, and we haven't talked much about foundations, but they also have a role here. But given that we are limited by time, maybe we can pick up on ourselves, as an industry of impact investors. What do you think, we could do better? And how do you think the younger generations, when they are sort of forming these entities, what are the things that they can look at from a fund manager, from a private investor perspective? What can we do better that is moving the industry forward?
Yeah. I think there are many things we still need to do better. We're not perfect, far from it. One word comes to mind, and it's standardization. Standardization of the products, of the way we speak about our track record, standardization about how we measure our impact, how we report on impact. Because frankly, if you're new to this and you come from the traditional asset management world, it must be difficult. There's so many different actors and players, so many different discussions, different definitions, different processes and methodologies and theories of change, and that it is almost frightening. So I remember, you remember, Assad, at the time CGAP was in microfinance, was doing an amazing job of actually structuring, supporting ratings, standardizing definitions. I think they did a lot to the growth of the microfinance sector, I
Yeah.
believe.
Yeah,
And
sure.
we would need something like an industry body that sort of maps out who's who, and we have, the gym, and but more standardization, so that people coming to us understand faster, can compare. I think that's still missing. We're progressing, but that's still missing, honestly.
Yeah, no,
That's the
that's a
big thing.
very big challenge. Common definition in the off-grid solar sector, there is, even how you define delinquency is not there. So even
Exactly.
the blame is not all outside. There is some of
No,
it
no, no, no,
internal
no.
for us as
No.
well. Yeah.
Absolutely, absolutely. I'm happy to take the part of the blame. No, no worries.
All of us, right?
All of us, and we need to improve. Um,
Yeah.
yeah.
So JP, last two questions. So, we started with microfinance, right? And then impact investing, you are looking at I just created a fintech mortgage company in Pakistan, which I think is really a big revolution. Right after microfinance, agriculture, you get energy, you got, the water, all these things. How do you see the future? Where do you see this leading to in your mind as you look at 20, because 20 years ago, right, when you started this, right, versus or more than 20 years ago, but 20 years hence, what is your vision? How do you sort of see where we are in this? I know it's a sort of a pie in the sky question, but
No, but that's a good reference. I mean, 20 years to bring, commercial investments into, doing something sensible for the planet and for people, bringing microcredit to microfinance, and then starting, the development of all those access to energy, access to healthcare, smallholder farmer, water, recycling, you name it. It's, as I said, it's not stopping. And in 20 years, I see many impact sector focused, pools of assets. I sense some sort of consolidation coming up. To bring effectiveness and efficiency in what we will have developed, many of us around the planet. I sense then, if that happens, a connection in a continuum of funding between the foundations, the early stage investors, the growth, equity and debt investors, and then the big guys. I have a feeling that we're building the blocks of that today, without necessarily knowing it or consciously. But I think that the market will, first see who's doing a good job and not. Second, I will see of those myriads of initiatives a consolidation. And over time, I believe with the growth of the industry, of the overall industry, aspired by the ESG wave, I see a very steady continuum of interventions all the way from grants to the big pools of capital. I think it's going to happen. And I think it's going to happen faster than we think, Assad.
And clearly your institution, your baby, Blue Orchard, was acquired by Schroeder.
Yes.
So I think it's, it has its complications. I'm not saying it's a perfect thing, but it is a different step. It's a different, sort of direction that we are seeing.
Absolutely. And I believe that it is, when we started in 2001, that had always been the goal, right? It's really, how do we mainstream, grow, become so efficient that we are connected to this, mainstream world. And I'm very happy that my first baby did it. my second hopefully will do it one day. And that's the challenge and the history. That's cool. But you don't have to lose your DNA and your prime mission.
Yeah. No, I think that's core. So with that, JP, to the younger next generation, what is your advice? I mean, what out of your struggle, in sort of creating two prominent impact in one of the first and one of the in very innovative ways, what would you tell younger people? What is your essence? What did you learn?
I think I'm trying to tell this to my two kids. They're now 12 and 15, and they're coming to an age where they start asking questions. I think, and it's going to be obvious what I'm going to say, but the first thing is know yourself. Know what you're good at, know what you enjoy doing, and you focus on that. And if you have an idea and everybody tells you it's crazy, maybe it's the sign that it's actually maybe not that crazy. And you have to pursue your dream regardless of what people will tell you. And, if one day you have the choice, following your instinct, your talent, knowing yourself, you have the choice between following your heart or following your reason. You have to follow your heart.
Yeah.
And then you will be happy and successful.
Yeah. Good. Thank you very much, JP. It was a pleasure walking down memory lanes with you. And
as always, Assad, anytime.
Thank you so much. And
thank you for reaching out, Assad. I really appreciate it. We didn't tell you, talk about you, but next, I hope we will have something, you know, a conversation about you, because you were also one of the first. And you were,
yes,
you know, in Deutsche Bank Foundation when I started Blue Orchard, and you were already doing an amazing job. So I hope, you know, you give yourself the favor and to the world and to the younger generation to tell your story as well, Assad.
Thank you very much, JP. It's really, you know, with this industry is such nice people. You know, we are not cutthroats, and we have, you know, like you said, you know, from all these NGOs that helped you, all the people. I remember getting one of your first board members. Remember, it was a lady out of Germany. But anyway, it was a pleasure. I see a lot, you know, things I had forgotten and came back, and it was a pleasure. And I hope people will see some productive impact of your learning. And thank you very much, and have a great weekend, JP. Talk to you soon.
Thank you. Thank you, Assad. Be well.
Bye-bye.
Take care. Bye-bye.
Bye-bye.